please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
0.5% higher, 11,000. So that's the pleasant sight. Some fireworks is in order, isn't it? 11,000 back again after mid-January, right?
No, why?
So it's about 6 months since we saw the 11,000 number on the screen. And it's staying there, 0.5% higher and about 170 up on the Sensex. That's also up 0.5%. Bank Nifty is up almost 0.6, as is the mid-cap up 0.6. So extremely good advanced decline ratio, which has been a sight for sore eyes now. 777 stocks for 186 declining. A great average. Okay.
6,444 mark has been reached.
So that's a record high.
All-time high for the Sensex as well.
Okay, this definitely calls for fireworks. Okay, the grand old index at all-time highs. Yes, let's have the celebration coming. Okay, Sensex at record high. Important. That's an important mark for the grand old index. But, just getting back to the numbers, the three oil marketing stocks are the ones that are leading the way. Each of them up 5 to 6%. Dr. Reddy's, HCL Tech, Tech Mahindra are the other stocks that are up in the top 10. Reliance as well up about 1.2%, and that's a huge contributor to the Nifty. SBI, IndusInd, Yes Bank are the three finance stocks that are up and about. ICICI Bank as well. Infosys again adding about 1%. All these are heavyweights which can add to the index in a big way. The red stocks are actually few and far between. There's TCS, which is giving up a bit of steam so that people can buy up other stocks. ITC down about 0.1. I mean, these are hardly in the red. It's all flat. It's only Bharti Infratel, NoNGC, which are down about 1.5. So that's a grand showing, with mid-caps doing even better. Reliance becomes a $100 billion company.
Well, what a journey it's been for this market. And it's taken a lot, right? From LTCG, 1st Feb was the day after the budget, right from that LTCG hit to global issues, to Trump, to trade wars, to North Korea, all that, the selling that we've seen continuously from FIIs. Despite all of that, local liquidity has kept things going, and we are back at record levels. Anyway, celebrations continue, but let me quickly recap the mid-cap trade for the moment. We're about 100 points up on the mid-cap index. It's doing quite okay. Of course, everything that is relating to the oil trade is working well. Interglobe 3.5% on the higher side. Jet Airways, SpiceJet, most of these stocks are up and about. In fact, let me pull up some of the smaller refinery stocks as well. Maybe you should get something like MRPL. Even that's positive for what it's worth. Chennai Petro. Everything is on the oil and gas side is on the upside. Beyond that, just quickly to talk about Ashoka Buildcon. This stock has been very, very strong right from the start. 12.5% up on this one. Jain Irrigation about 3%. JK Tyre, Dilip Buildcon. Road contractor stocks were up in pre-open, and that trend is continuing now as the markets opened out. The stock that Anuj told us to keep in mind, EIL, has had a good start, 2.5% up. That's again an oil play. Tires are generally up. CEAT is also up about 2%. So big list of gainers for the time being. Not too many losers, at least, to speak of immediately. Anuj, now this is it. 11,000 is here. It's great to get the drums up in favor of the bulls. Sustainability, I know those questions will immediately start coming up.
Yeah, but new all-time high for Sensex, and it's interesting, every time Sensex has hit all-time high over the last 2 or 3 years, we've seen that, that party play out. I think today the mid-caps have also started quite okay. The key would be, can we sustain that? And I think a lot of people are trying this cute trade of shorting Bank Nifty because it's already opening at a bit of a discount to the spot. My sense is, today being weekly options expiry, they could be taken to cleaners today because this is not the kind of cute trade that you want to play, because there's still some headway perhaps for the Nifty. But Ashwani, your thoughts on market opening, and is this a gap up that you're chasing?
See, this looks like a 300 plus Bank Nifty move, so forget about shorting. I think absolutely we would like to chase, because this sort of news flow wasn't priced in. You have a 30-point discount, but that will get covered because there are other sectors also which are moving up. So it's not just the banks, and things like HDFC Bank are also coming out of a contraction. So my sense is that this is the first real expansion on Bank Nifty, because only now do you have inflation trigger on the downside. Otherwise, inflation was looking menacing. So I think today you will end at a Bank Nifty premium instead of discount. So just get on board, and I think this has ways to go.
Okay. Any interesting stock, Ashwini, or is it just Nifty and Bank Nifty that you should focus on right now?
see, India, if crude comes off, everything goes up. So HPCL, BPCL, Jet Airways, all kinds of financials, NBFCs, basically everything domestic is going up. Today there's no point trying to buy tech, because chances are today it should remain flat and all attention should now be focused on domestic stories.
Okay. Well, HCL Tech, the previous announcement was at 1,000 rupees, not now. So today we have to wait to see what is the announcement. Okay, RIL, it is not yet at 6.8 lakh crore. So we have to wait for it to get to 6.9 lakh crore for it to be a $100 billion company. It's at now 6.68 lakh crore. So just a little bit more, and that stock also will be a $100 billion stock. But in any case, we have enough to celebrate even without that number. The markets, the mid caps now 0.7 high, the bank nifty now racing to a 0.8% gain, and TCS is not participating today. In spite of it, we are seeing a lot of celebration in the markets. As well, advanced declines. It's an extremely pretty picture. So Darshan, what's the new stock you would be trading?
Well, you should be long in the Nifty Bank, and same stocks, TCS and Hinge Unilever.
Okay. By the way, big move happening right now in tire stocks. Just keep an eye on some of them. Of course, there's a play on crude and also rubber that's taking place. But Ashwani, anything on say Apollo Tires or Balkrishna Industries?
See, again, crude derivatives will also start to participate because a lot of them have corrected. Paints are actually they've had their bit of a rally. So I would think, CEAT, MRF, Apollo, they should do well. But, really anything that uses crude basically should move up from here.
Okay. Mitesh, your thoughts? Anything new?
Lata, I think one bank nifty, getting past this 26,950 with a gap up like this, I think should see follow through. So I would not be averse to buying the 27,000 or 27,100 call for today. That about, I think, crude, derivatives, I think Ashwini also highlighted clearly are on the list. Berger, Paints, Pidilite, both look good to me.
Ashwini, just a question on these road companies. The whole market is so excited today. But these road contractors, Ashoka Buildcon, Dilip...
Just a minute. Ashoka Buildcon is come bonus.
Okay,
it's only a corporate activity.
Okay, that's a corporate activity. But even Dilip Buildcon a little excited. I mean, is there any point in looking at any infrastructure trades now that the market's mood seems to have turned?
Well, infrastructure is kind of rate sensitive. So maybe it will also move. But today's story is financials. Because, financials are a big roadblock to rate cuts and all that probably gets out of the way. And because of that, mid caps could move up because when rates come off, mid caps anyway tend to find traction. So that way you can buy road contractors, etc. But infrastructure still is not outperforming. So don't get overexcited.
All right. Fair enough, gentlemen. Ashwini, you want to wind up with a big call at 9:20? Bank Nifty, is it?
See, Bank Nifty is expanding. So anybody who's looking at it from a 3-day, 2-week, 3-week perspective can also buy. Even for intraday, even right now, it's a buy because this sort of move generally does not end at 200 points. I won't be surprised if you get 1,000 points finally on Bank Nifty.
Ooh.
Okay. Thanks a lot, gentlemen, for taking us through the market opening. Devin, thanks to you as well. Of course, we'll keep inviting our technical analysts through the day-to-day. For now, S. Krishna Kumar, CIO Equity of Sundaram Mutual Fund, is with us. Krishna, good morning. All-time high on the Sensex. Doesn't look like that for portfolios, though. Your thoughts on the dichotomy that we have seen over the last 3 or 4 months?
Yeah. I think, during any economic expansion with the bull market, you have differential phases in the market in terms of moves between large caps and the broad market, right? So you had a stupendous run last calendar year on the mid-cap, small-cap side, the broad markets, which went up between 40 to 80% in different pockets, whereas the large caps were probably between 25 to 35%. And even over a longer time frame since the start of this expansion from 2014, there has been a more than 100% alpha that the mid and small caps have given over the Sensex broadly as indices. So, these things get, the spreads do get, again narrowed at some point in time. You have, the large cap segment of the market picking up steam given the differential valuations that exist basically. So these are parts of a longer bull market, and I think this much awaited rebalancing of returns, if you could say, has happened. Last 6-8 months, large caps are up probably about 6-7%, and mid and small caps are down between 12 to 20%. So this basically has brought the 1-year forward P multiples to kind of very similar levels. The mid caps, the indices are at 10%, 7% kind of premium to Nifty, whereas small cap indices are at about 10% discount to the Nifty Sensex P multiples. So this makes the valuations again fairly balanced and compelling for a broader move in the market. So given the kind of correction that we had in the mid caps over a bit of time, and the fact that we are kind of getting into an earnings season which is well supported by strong growth that you're already witnessing in results that have come out, I think we would see a more broader rally in the markets if the global factors do not play spoil sport.
Good morning, Krishna. You're making a very strong statement. You are saying that the mid-cap pain is largely over?
In a sense, I think a lot of the purging that had to be done has been happening. You have seen the kind of issues that came through following the rate increases and yields going up, and all these rates clearly affect the mid-cap basket broadly. Also, if you look at a lot of the commodities, we had a strong move, and but in the last 3-4 months, you have seen really the metals giving up big time. So that's also easing up. As you can see now with crude kind of coming off, we do expect that supply will kind of get better, and crude should kind of get into that $70 kind of band. That should also help rate sensitives, which typically the mid caps are. So a lot of the things that were kind of working against the mid caps fundamentally are easing. And you're also seeing that the domestic demand is largely in place at this point in time. Last 6 months, we have seen a fairly strong improvement across the board. And though the global exports and other trade-related issues could be a bit of a concern, but most of the mid caps are probably in very niche areas and would not get really impacted by some of the export-related issues. So broadly, I think the fundamentals are good. The valuations are intact now after the correction. So I think I would definitely argue for a bit of shift back into the mid cap, small cap space at this point in time over the next 3 months.
So, Krishna, morning. Then, which mid-cap theme are you most bullish on right now? We're just taking a look across the holdings across various funds, and it seems that there's a fair play on auto ancillaries that I see around. I mean, different stocks. There are bearing stocks, there are battery makers like Echange. A lot of auto ancillary or auto-related plays in your funds. Is that a theme that you are really bullish on for this year?
Yeah, I think just taking on from the previous discussion, the automotive segment is clearly linked to interest rates in a significant manner, and so also linked to commodities, right? So with the kind of ease in prices on different commodities and also the fact that incrementally we do not see a sharp rise in rates and yields, I think this space has a lot of legs. It has also been fairly bearing the brunt of the correction that has happened, and valuations valuations are back on track. So, stocks which are linked to, the automotive value chain, it could be commercial vehicles, it could be, the ancillaries which have, supplies into the CVs and the passenger segment, not to mention tractors, I think. So all the segments are doing very well. So I think the next 2 years look very good from the auto component perspective. Batteries, tires, bearings and other, parts on the engine side. I think a lot of changes happening there in terms of new products coming in. So there is a lot of opportunity there in which one should be betting on. In addition to that, I think the building material stroke, consumer durable space, I think has been a little bit on a weak footing, given the slackness in growth in different parts of the market, and also driven by the GST transition and also the the kind of raw material push they had. So we see that at this point in time, a lot of these issues which bogged them are settling down. The valuations have corrected substantially by more than 30-40% on this side. So we believe the consumer brown goods and the building material space is again something that is a more structural story that we would back on.
Okay. Yeah, sorry, you want to say something? Yeah. No, I wanted to ask you, Krishna, if you were to rejig your portfolio, you've spoken about two themes, autos in a way, and consumer and building material. If you were to rejig, what would be the next sector that you would be attracted to? Would it by any chance be IT, mid-cap IT in particular?
See, in terms of the software space, we've had a fairly good run in the last 12 months. It's been one of the best performing sectors. Started off as a value trade, and then it's moved into a little bit of growth orientation now, given the improving fortunes that the companies have been talking about, and supported by the rupee depreciation.
Have too much of it.
Largely the IT story has the IT story has played out basically. I think it would be more a neutralish kind of bet at this point in time for us on the mid-cap space. What we would like to do is to selectively look at pharmaceuticals. Basically, there's been a lot of pain around the sector, and I think slowly we see that the bottom is in place in terms of stock prices. The valuations have corrected. So depending upon the pace of positive information and pipeline improvement, the pharma space, the healthcare space should get back into interesting times as we go ahead. One more broader interesting area that we would focusing on, and we would probably come out with a product also in that space, is the services sector. I think in every economy and every developing economy, the service sector is the one that benefits as people tend to kind of get a lot more organized, and the trade moves from unorganized services to organized services. So as we can see around us, starting from retail to entertainment to hospitality to healthcare services, there is a lot of benefits the service sector is getting from the integrated GST, etc., and also the fact that there is an increased sense of awareness, and also the kind of incomes to kind of to support each way in terms of the new services space. So we see a whole lot of emerging services that would take off across the spaces I mentioned. So I think we are very clearly looking at a diversified services kind of a portfolio, and that would again find positions in the mid-cap fund too.
Okay, Krishna, I just had one question. I mean, we keep tracking the fund flow data. What about flows or redemptions with respect to mid-cap funds? Because that's the breakup that AMFI doesn't give us. What has the trend been like the last 2 months when we've seen this mid-cap carnage? And is the money flow still coming in mid-cap, small-cap funds?
Yeah, I think we have, as a fundos, a higher share of AUM in the mid-cap space, and we have been, very surprised that in spite of the media talking about, redemptions and slowdown in the mid-cap space, we continue to see good improvement in the mid-cap inflows on a net basis. I think, our mid-cap fund particularly has been built a lot more on the retail franchise, and it's very granular in terms of holdings, and hence, the investors have been a lot more patient with us, and we continue to see a fairly strong pipeline in terms of SIP book that we have been able to build in the mid-cap space. And more broadly, as an industry, I think, last 2-3 years, this concept of investing through SIPs, particularly the mid-cap space, has gained traction. While in CY 17, people were questioning the wisdom of investing in SIP on the mid-cap space because of the sharp bull run we had at the time. I think now it's come back to kind of prove a point that over a longer period, SIP investing into mid-caps is something which is a lot more, a lot less riskier, and could be a very wise approach to investing as you look at long-term wealth creation on a sustainable basis.
Okay, Krishna, it's always a
long and the short. I think we have been getting fairly good inflows.
Okay, fairly good inflows, and not seen too much of redemptions either. Okay. Yeah. All right, Krishna, we will leave it at that. It's always a pleasure having you with us and delineate the themes that you are focused on. And importantly, of course, the mutual fund industry is, at least from Krishna's angle, not too much disturbed by the ebb and flow of the market. Well, with that, let's shift focus to another important corporate guest. One of the marquee stocks in India, Motherson Sumi, has actually fallen by about 20% year to date, largely been a victim of the trade war fears. Is it really going to affect the company's business and its investment decisions? For that question, we have Mr. Vivek Chand Sehgal himself, Chairman of Motherson Sumi Group. Mr. Sehgal, good morning, and thank you very much indeed for joining us. Well, really, that is the first question. The stock has optically been a victim ever since the trade talk began globally. Just tell us, does it really hamper your business? Has it hampered business in the first 6 months of calendar 2018?
Good morning, Lata. Yes, thank you very much for asking this question, because we are one company which actually doesn't get affected at all. Oh. First of all, we are manufacturing in all the countries where our car makers are there. So we are not into exports and things like that. The other very important thing is that in times of such kind of scenario as you painted out, we find that the opportunities to acquire companies becomes that much more, because the car makers want that much more stability. And hence, Motherson is actually a gainer, because we pick up a lot of companies which the car makers want to be stabilized in times of these kind of disruptions and things like that.
Okay, Mr. Sehgal, hi, good morning. In fact, I take your point, because, you could have an issue with car makers, but not with those providing to those cars. So, are you saying that anecdotally there's been absolutely no impact, and going forward it should not have any impact on the kind of guidance that you have given us in the past?
I think, as I said before, if anything, it's probably going to help me to achieve my targets faster. So we're quite sure that the targets are within our reach. We have a lot of companies which are already in the pipeline, and I think if everything goes fine, and our target is not just the top line, it's also the bottom line, 40% growth. So I think if both of them are met, definitely we will achieve our target.
Morning. Just to play devil's advocate for a bit, because I think the reason people quickly start putting two and two together is that some of your marquee clients, people that you do business with, the Daimlers, the BMWs, and the Audis of the world, they have sounded increasingly cautious. Many of these companies have said that we could see some impact on our earnings, our EPS, if this trade war issue escalates, particularly with the cross-tariff talk between the US and China, China being a very important market for these automakers.
Yes, I think all the things that our customers are saying are valid. So there's nothing to sort of argue on that. But please understand, Motherson grows by content in the car. So we are not really affected if the car making numbers are going down, say 5%, 7%, or something like that. We make one acquisition and we've grown already 15%. So our story has always been increase in content per car. So if you understand, we are actually quite away from these turbulations that happen in the car numbers and things like that.
No, Mr. Sehgal, if Daimler makes fewer cars and you're supplying to them, then won't that mean slower growth?
But let's look at it. What do you imagine they would grow their numbers by? So if you say it's negative 10%, but if we acquire a company worth, say, 2 billion, 3 billion, we've already grown 30%.
Okay.
So you understand it's a different thing altogether, because people are talking about numbers of car going down in a month or 2 months or a quarter or something. We're talking of a whole company coming into the group. So with that company coming in, we've already grown 20-30%. So it's really not so much of consequence.
So, sir, is there a new company coming in the group? I mean, since that's a very clear strategic bent of mind that you're sharing with us, I mean, on a more serious note, are you actually looking at acquisitions in the near future?
Absolutely. We've been saying that. We've just acquired Raydel. Raydel, in fact, we've just got the confirmation. The Raydel gives you a great explanation of what I'm trying to say. Raydel by itself is about €1 billion. So if you think about it, my last year turnover is about 10 billion. So I've already grown 10% because of Raydel coming into the group. So that's what I'm trying to say. It's not necessary for us. In fact, in our group, we actually say we don't want to depend on one particular car maker too much. So we're growing very strongly in China, and we have plants in China to support China. So whatever is the effect of China war with whomever is not really affecting us, because we are talking domestic consumption over there. So, that's the way we have de-risked our business over a period of time. And we are seeing the benefits of that coming very, very clearly.
Okay. Are you changing any of your investment decisions at all? I mean, we hear Harley-Davidson is changing its investment location. Have you had to rethink anything at all in terms of acquisitions or investments?
Lata, I think, the car makers have their own compulsions and they are taking their decisions. But the key point to note is that they are not getting out of their existing countries where they are. And for a group like Motherson, if tomorrow the customer that you named takes a decision to go to, say, Europe, we are already there in Europe. So we already have a facility which is going to support them over there. So in the worst case,
no, I'm not asking if you will move because Harley-Davidson has moved. I'm asking if similar compulsions color your investment decisions, and therefore, or even your the places where you will go for capex.
Understood. Yes, I agree that yes, if a customer decides to go to a different country, different area altogether, it might necessitate for us to set up a plant there. But we don't shy away from that.
Okay. And what about Brexit? Does it impact at all? Ralph Speth was even wondering if he should continue with the investment in the UK. Are any of your sales impacted positively or negatively if there is a hard Brexit?
We've already studied that to a great extent, and we've come to the conclusion that it doesn't affect what we are doing. We have put on hold what our investment in Britain was, but that is also temporary. Okay. Because I think the moment this particular thing is cleared out, we will take our decision whether we go ahead with that or go somewhere else.
Mr. Sehgal, sir, I'm sorry, but I'm going to come back to this point on acquisitions because Reports suggested beyond Redel that you could look at one in Europe, one in Japan, and one in the US. And again, these are just reports. They said this could happen in the next 6 months to a year. Now, are these timelines even correct? And what about balance sheet strength? Because you have to digest a big Redel, which is 1 billion. What's the kind of leverage levels? So just trying to understand the acquisition strategy in terms of how much more can you stomach? What's the appetite in terms of just debt equity? What's the target size that you'd be looking at over the next 6 months if there's something really there?
So we've never ever crossed 2.5 to 1 on debt. We have a lot of headroom there. Secondly, we have say about 6 months ago done a bond issue at 1.8%, which is probably one of the cheapest bond issues for 7 years. So, we have a lot of options open. Yes, we are very, very sure that we are going to attack our 2020 target. That would make it the 5th 5-year plan, which we have already grown to successfully. Okay. We will look at it only on the basis of the bottom line. We are a bottom line growth-focused company, so we will do it on that basis.
All right. Always a pleasure speaking with you, Mr. Sehgal. Thank you very much for joining us and clarifying some misconceptions on tariff wars and how companies like yours may be affected. Well, market's still chugging along very well. Nifty, I think, still at the highest point of the day. 11,000 has not been given up and only built on. Sensex up 250, Bank Nifty up to 70.
Also, it's turning out to be a PSU Bank and NBFC day. I think a lot of NBFCs...
I'm not surprised.
We discussed in the morning, just don't restrict it to your HPCL and BPCL of the world. This is a macro move. So, stocks like L&T Finance, for example, that one I think is making highs of the day, M&M Financial. So, some of these stocks are really the ones where you're seeing quite a bit of follow-through buying after even a bit of a gap up that you've seen.
Yeah, and all those PSU banks which inevitably have bond holdings and therefore benefit, Vijaya, Allahabad, IDBI, of course, is a trajectory of its own. Bank of Baroda, all those also gaining. We take a quick break, but pharma stocks have been in the limelight. Next to IT, that's the sector that's been seeing a lot of gains. Anmol Ganju of JM Financial joins in